Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, it's about 8:15, so we got jobs coming up in about 15 minutes. But we talked yesterday about it trying to go up and engage this upper band on the daily chart. It's traded as high as 87. That upper band is sitting right around, it's around 86. So I think if I zoom that in close enough, we will have already engaged the upper band, which puts an upper band ride into play Sunday into Monday. We talked about how, look, price doesn't care, okay? Price doesn't care about what you think or what you read or how the world should be. It doesn't care about central banks. It doesn't care about monetary policy. It doesn't care about me. It doesn't care about anything. Price is price is price. And as I've said for several weeks, until the bears can convert a price level in a meaningful fashion, these dips will be bought. We will continue to go up. Does everybody hate the rally? Of course they do. Everybody hates every rally. That's fine. But it doesn't mean you have to fight it on principle because you think the world should be a certain way. Might as well get long with the rest of us. And, look, we were short when there was, things happening in the Middle East, and when this thing finally tops out, we'll be short there too. But until then, we're going to be the ones that are squeezing the shorts, not the ones that are getting squeezed and getting frustrated every day, fighting a tape that is not ready to go down for whatever reason. Traders tend to spend too much time on why. Why are we going up? Why aren't we going down? Why are we going down? Why aren't we going up? If you spend a lot less time on the why, or trying to find some small discernible clue in all of it that's going to tell you ahead of time when the thing is finally going to top out, versus looking at price, waiting for the thing to make some lower highs and convert an area that matters. Because what I will tell you is when this thing comes down, we're going to go down and engage things like the 50-day, which is the red line there, the 100-day. I mean, these things will happen. They always do. But not till they're ready. So until it's ready, we're going to be long. So another all-time high, a top over in the hourly chart. We talked about how the weekly pivot there at 35.25, the inability to win the battle over the weekly pivot early in the week was going to bite the bears in the end of the week. They took it out by 50 handles. They V'd them and they kept going. So these directional days that are Thursday into Friday tend to be in the favor of the side that won the weekly pivot battle early in the week. Now, yesterday in RTH was pretty choppy. We didn't get a whole hell of a lot done. We had a really nice long into the close that we held overnight, and we ended up having a good day, but it wasn't, look, no day was going to be like Wednesday. If there was ever a gold-plated invitation to have a day that, where the market kind of took a breath, it was certainly yesterday after what we saw on Wednesday. So what happens today? I don't know. You got jobs at 8:30. We'll see what the reaction, if any, is to that. There's news flow from everywhere else. It's always going to be there. But what I would respectfully suggest is if we get a pullback, and on these pullbacks, it's fine to be short them, but understand they are trades. They are rentals. And we are not long-term, multi-day position traders. Some people in the room are. Some people are still long from Wednesday, and before that, they were short from the 50 area from before we went down, because that's what we were doing Wednesday during the day and Tuesday. We trade price on a daily basis, and that allows us to get rid of a lot of these biases. I spend most of my day trying to tell people, to get all of this other stuff out of your brain, get off the why and focus on the chart. When it's ready to go down, it'll go down. But I can feel the fight in this tape. And, for the people that are buying these dips and getting long, that's fine, because they're feeding off everybody who's fighting this thing. And look, once everybody's done fighting, once all the skeptics buy in, that's when you go down. Is that today? Is that 2 weeks from now? Is that 3 days from now? I don't know, and I don't care. It'll happen when it happens. Until then, simplify your trading, follow price. Understand that if the bears can't convert this hourly mid-band, okay, that has been support since what? Since 3 o'clock in the morning on the night of the Iranian incident. Unless they can convert that, there really isn't a whole hell of a lot else to talk about as far as being short is concerned. So the other thing I would suggest is I'm going to be flat into the weekend. I was flat into the last weekend. I missed this gap over here. I could care less. I don't want any weekend risk now. There's just way too many hours between the close on Sunday. The close on Friday and the open on Sunday, geopolitically, where bad stuff can happen. So I will absolutely be flat into the weekend, no matter what I'm up on a particular trade. So I would suggest, you've got to be mindful of your risk. You've got to be mindful of your risk right now. All right. Have a fantastic day. Have a fantastic weekend. More stuff out on social. Come check out the room. Trade them well. Talk to you Monday. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.